Tēnā koutou katoa. Good evening to you from Tamaki Makaurau, Auckland, New Zealand. My name is Murray Bruges. I'm the director of the Helen Clark Foundation, Mahi Arongo. It's my pleasure to welcome you to this afternoon's webinar, exploring key global trends and their relevance to New Zealand. As always, a very warm welcome to our Helen Clark Foundation members. Our foundation is an evidence-based, independent and non-partisan think tank, and we really couldn't do this work without your support. If you're not a member of our foundation and you enjoy this webinar, please consider supporting our work by becoming a member at Helen Clark, that's all one word, .foundation. You'd be also most welcome to register for our free newsletters while there. Before we begin today's webinar, I wanted to draw your attention to the final webinar we'll be hosting for 2023. So at midday New Zealand time on 11 December, Helen Clark will host the former Prime Minister of Australia, Malcolm Turnbull, for a webinar discussing a range of issues from the voice referendum to renewable energy, to climate policy, to the Australia-New Zealand relationship. And we'd be very pleased to have you join us for that session. Registrations will be open from next week, so please keep an eye out for a notification in your inbox then. And if you're not on our email lists, please do consider signing up for free at helenclark.foundation. For those of you who haven't joined many of our webinars before, it's worth noting that this is not a normal Zoom call. Your cameras and microphones are off, and there's no risk anyone can see or hear you eating your dinner or whatever meal you may be eating in your current time zone. That said, we would love for you to participate in this webinar, and the best way for you to do that is to submit questions as they occur to you by typing them into Zoom's Q&A function, which you can access at the bottom of your screen. You'll also see there is a separate chat function. We might use that section to put links during the webinar, but please do put your questions into the Q&A area. Today's webinar will explore a range of key global trends and their implications for New Zealand, including China and its economy, India's place in the world and its relationships with other world powers, the changing nature of globalization, the United States and its economy and politics, and the conflicts in Ukraine and Israel-Gaza. At around the 40-minute mark, we'll switch to a Q&A session, and at that point, Helen will put the questions you've entered into the Q&A section to David. After the webinar has ended, you should receive a message to fill out a quick survey about tonight's webinar. If you have a moment, we would greatly appreciate hearing from you, and we very much do take your feedback into account as we're developing future webinars. So that's it for housekeeping. I'll now introduce our guest today before handing over to Helen. David Skilling is the founding director of Landfall Strategy Group, an advisory firm that provides advice and insights on global economic, policy, and political dynamics. David served as senior advisor to the Secretary of Foreign Affairs and Trade in New Zealand between 2011 and 2015, providing insight on global economic and political developments. And I had the pleasure of working with David briefly during that time. David has also worked for management consultants McKinsey, was the founding director, executive of the New Zealand Institute, and has worked for the New Zealand Treasury. We're very pleased to have you join us live from The Hague, I think, today, David. And over to you, Helen.
Unmute myself. Thank you, Murray, and I can think of no better person to join our webinar to talk about global trends impacting a small state like ours than David Skilling, who I've known for many, many years in his role as a commentator and contributor to debate in New Zealand around economic and wider issues. And if you do a Google search on David, you'll find that he does also particularly talk about small states and globalization. Well, we are a small state, you know, a little cork of a little over 5 million people in an ocean of a world population which was estimated to reach 8 billion in 2023. So we sort of float on this ocean trying to make our luck and navigate around the storms and big currents and tides that come our way. And there's certainly plenty of those at the moment. We live in times which many phrases are used to describe, whether it's through a syndemic. We know we've been through a pandemic. Is it a polycrisis, as the World Economic Forum says? You know, what is it? There's a lot going on out there, and David is well equipped from his vantage point to be able to, you know, give us some really informed thinking on that. So, David, I guess really the first ball to throw to you is the sort of overview one of the big economic and geopolitical trends that you are watching as we come towards the end of a turbulent 23. And which of these you think is really going to have the most significance for New Zealand in the near and medium term?
Well, I think it's wonderful to be here. I mean, as you implied in your question, there are any number of things that could make the cut in terms of key global economic and political dynamics. I think from a New Zealand perspective, there are probably a few, but I would point to. The first is issues in and around China. Both China domestically in terms of its domestic economics and its domestic politics. The Chinese economy is slowing. Chinese politics is looking increasingly autocratic at home. And that has, given it's one of the world's largest economies by GDP and population, what happens in China, matters enormously. And I think the risk profile around China, both economically and politically, is higher. But of course, China is also, a significant geopolitical player. And I think the dynamics between China and the US, China and the West more broadly in terms of, particularly on the economic dimension, so de-risking, decoupling, the extent to which these two kind of big blocks in the global economy are pulling apart. I think the spillovers from that are going to be one of the key dynamics over next year and beyond. And the thing, I guess, that concerns me is that they have a self-escalating logic to them, the restrictions, the sanctions, and the like. I don't think there's an easy way to de-escalate. And so for an economy like New Zealand, and with many others, of course, exposed to that, that at a minimum, raises a risk profile. I think that the second set of issues, as I look into next year is a year of incredibly consequential elections around the world, from the US to India to Taiwan and many others. And the global spillovers from those domestic elections, I think, looms large. I mean, clearly the 2024 US presidential elections is probably top of the list in terms of whether Mr. Trump gets across the line for a second term. And even if he doesn't, the direction of travel in US politics, given the central role of the US in the global system, what happens in the US matters enormously for the world and clearly for New Zealand as well. So I think, India and many others as well. So I think, politics through next year, I think, is going to be enormously consequential. And finally, more on an economic note, we've got a constellation of challenges around the world. We have very high levels of debt, both government debt and private debt. We're in a high interest rate environment, which is not going to reverse anytime soon. And we've also got slowing GDP growth, the potential for economic shocks, be it rising oil prices, commodity price shocks and the like. So I think that kind of constellation of issues, high debt, high rates, financial stresses around the world, the potential for something to go wrong in that environment is much, much higher. And for a country like New Zealand that does have high levels of private sector debt, the government side is okay, but on the private sector side, significant debt, a big current account deficit. We were relying on external financing to kind of run that current account deficit. That poses real challenges for New Zealand as well. So I think, looking at the world from a small state like New Zealand, there's no shortage of issues, and that's before we even get to things like climate and AI and a whole raft of things. So, New Zealand, as you say, is floating on a fairly turbulent sea at the moment, and I don't think that's going to calm anytime soon.
Lots to get our teeth into there for sure. I mean, on the issue of the Chinese economy, the Western media has a pretty steady litany of China not able to reach its potential, stagnating, etc. Are you as gloomy as that consensus suggests, or do the Chinese have another side to their story?
Well, I think it's a bit of both, and I think some of the catastrophizing in the Western financial media over the last 3-4 months has been overdone. But at the same time, China does have deep structural challenges. Most obviously, I suppose, in the real estate sector and associated financial institutions, both public and private. That's been a significant driver of growth, and by any measure, it's very, very stretched. And so there's going to be a process of reckoning. The issue, I suppose, where that's a more of an implosion style reckoning, where sort of a crisis ensues, or where that's more the air kind of gently escaping from the balloon, sort of a more gradual deflation process. My observation of the Chinese authorities over the last 10, 20 years is that they tend to manage these stresses reasonably well. They have more policy levers than most Western economies would, because the state is a lot more pervasive in the Chinese economy. So, these are real structural issues: real estate, debt levels, both public and private. But I'm not at the moment picking an implosion or a crisis. But I do think we are seeing China trending towards much lower levels of GDP growth than we've seen over the last 10, 20 years, where high single-digit growth rates were the norm. This year, it's going to be 5% or a touch under. The IMF picked that over the next 4 or 5 years, China's going to move towards sort of 3-4% growth levels, which by advanced economy standards are still pretty good, but by Chinese standards clearly is not very good. And you see even within Asia, the ASEANs, India, and the like are now growing at a more rapid clip than China. So yes, I think China has issues. It is going to slow, and it's going to slow structurally. Over longer term horizons, it's got a demographic profile that is going to act as a real drag on growth. Its working age population is contracting. Its overall population is already contracting. So China does have issues, but I think it's the fairer assessment is more that we're entering a period of of much more subdued growth in China. But I'm not picking an implosion or a crisis. Although that said, you never say never. It's very difficult to know exactly what's going on in China. But my base case is that China keeps on growing, just at a slower pace.
And I mean, as it goes up the income ladder, GDP per capita, one would expect the growth to slow anyway, right? I mean, developed economies cannot grow at the sorts of levels we see the lower middle income economies growing, and China inevitably would slow, particularly as its demographics become much older. I wonder too whether, though, its aspirations might be blunted by what's often called the middle income trap, which has trapped Malaysia for years, trapped others for years. They can't break out of it for a range of reasons. Do you see that as a real possibility, that aims to achieve high income status could be blunted by the constraints on freedom of expression, the constraints we've seen on the private sector, and those who might have been seen to be getting too big for their boots for the regime? Are they in this sort of syndrome now?
Yeah, I mean, I think they are. So, I mean, yes, you're right that as countries get richer, their growth rates tend to slow. But I think the view to remember, though, is that China is still fairly low in per capita income. Yes, they've got Shanghai and Beijing and Guangzhou that are very rich. They've also got a large interior with large rural populations that are still, in many cases, living at or pretty close to poverty. So, China is still a fairly low income basis when taken in aggregate. And so its slowdown in growth is happening at a reasonably early stage. And so I think the language around middle income trap, I think, is fair. I think it is difficult to see how China continues to grow its per capita income into high income levels. And it's worth bearing in mind that of all the East Asian economies over the last several decades, only a handful have managed to pull off that transition to becoming genuinely high income. The Japan, to Singapore's, the South Koreas. Many have not. So you mentioned Malaysia, same is true for Thailand, potentially true for Indonesia and Philippines as well. So it is a difficult thing to navigate, going from poor, growing very rapidly as China has done for a sustained period of time, but then can you kick on and become a genuinely advanced, sophisticated, high-income country? And I think to do that, it's not simply a matter of having lots of capital investment in a large population. You need to have strong social and political institutions. You need to have high levels of human capital. And doing that in a world in which you've got significant political restrictions on freedom of speech and expression, you've got significant uncertainty around the business environment simply because of the nature of political decision making. I think that's very, very difficult to pull out. So, clearly there are different ways of getting rich. There's no one single model. But I think it's going to be difficult with the Chinese political system for them to kick on in the way that they would like to. But therein lies a challenge, because if China becomes a deeply frustrated large power, that also contains risks for the rest of the world also.
So, in New Zealand, in our sort of insular position, we often look at, well, what does China's slowing growth mean for us? But of course, the scale of the Chinese economy is such that it's probably just about everybody's biggest or second biggest trading partner, right? So are we in any different or more exposed position vis-a-vis China than than say a small European economy, or Malaysia, or Canada, or Brazil, or whatever. I mean, what's the sort of unique profile of our exposure, if you like, to the slowing economy?
Well, I mean, the simple answer is magnitude. So, just under 30% of our exports of goods go to China, which is sort of circa 5-6% of New Zealand's overall GDP. That is much larger than a European economy, where export share to China will be, varies a bit obviously, but in general in the sort of 5 to 10% range, maybe 1% or so of GDP. So, New Zealand is much more exposed than an average kind of small-sized European economy, or a Northern American economy. Australia is, if anything, slightly more exposed than we are in terms of export share and exports as a share of GDP to China. But so New Zealand is one of the more exposed Asian economies to China, and that's in large measure a function of the last 15, 20 years. We signed an FTA, as you know, significant growth in exports of commodities to China. So New Zealand's export growth has been heavily reliant on China over the last 10, 20 years, which has been very positive for headline GDP growth, but does mean that we are exposed both to a slowing Chinese economic profile, if kind of demand for our goods and services reduces, but also creates some geopolitical exposures. If something goes wrong in our bilateral political relationship with China, there's potential for New Zealand to be squeezed. So, if you look across advanced economies, particularly smaller advanced economies, New Zealand is one of the more exposed economies simply by virtue of the amounts that we sell to China.
So if you were presuming to advise a New Zealand government, would the advice be, irrespective actually of the geopolitical issues that can arise, would your advice be to try to diversify, knowing how difficult that is to diversify the export basket we have?
I mean, the short answer to that is yes, although in saying that, I mean, as you just suggested, it's easier to say than it is to do. I mean, there's a reason that firms sell significant amounts into China, which is it's a, even at lower growth rates, it's still, in the overall scheme of things, large, growing. You can earn reasonably good margin selling into China, whereas India, Indonesia, and the like are oftentimes more challenging markets. But I think on the balance of things, it is worth paying some, if you like, insurance premium to better manage the economic risks and political risks associated with China. Even if it means that your income stream is a touch lower. But of course, the competitive reality is if you're the only firm that is doing that, and all your competitors are not, and you lose market share, then questions get asked of you. So, this is a tricky balancing act. A lot of it speaks to the risk profile that, that companies have and that overall countries have. But I think we are moving into a world where, if you like, the risk-adjusted returns of China, it's got, a lower return profile because of lower growth. I think the economic and political risk profile around China is increasing, but I think it's worth, sort of investing more in diversifying, and also, frankly, thinking hard about what are the potential shocks that you need to be, stress testing your scenario against. Because, I'm now living in Europe, Germany and many others who became deeply exposed to imports of Russian gas because it was the obvious thing to do. It's reasonably cheap. Russia had been very reliable for a sustained period of time until such time as it wasn't. And Europe has spent the last 18 months or so to trying to dig itself out of a fairly large hole at significant cost. So I think the one learning from that experience for a country like New Zealand is to be very thoughtful about concentration risk. And even in markets where historically things have worked out pretty well, despite clearly some political differences between Europe and Russia, between us and China. Even though those things have worked out well, it doesn't mean that they will continue to work out well indefinitely. And we should take it should be if you like, a cautionary tale, I think, for New Zealand.
So, a lot of the last, I suppose, 25, 30 years here, the story has been, the growing opportunities in China, and the FTA obviously made it an immensely easier place for New Zealand to do business and prosper in. But a lot of the talk now is of India's emergence and growth, and of course very much known for its huge technology firms, its biotech, a lot going on. What would you anticipate the level of opportunity for New Zealand in India to be?
Well, it's going to be a slow burn, I think. So there's many reasons to be confident in India. It's just become the largest country by population, 1.4 billion and growing. So it's overtaken China, and with reasonably strong demographics, at least over the next few decades. Its headline GDP growth rates are 6% plus. It's one of the fastest growing economies in Asia, particularly of that size. So, there's a lot that's going right for India at the moment. It certainly has a sense of confidence. It's attracting more FDI. Apple, for example, and other fairly sophisticated players are moving production into India, both to serve the Indian market as well as to de-risk aspects of their operations from China and elsewhere. And as you say, it's got a large and growing middle class. But of course, India, despite all of those kind of intrinsics, which look positive, is a difficult market to penetrate. We've had very long-standing FTA negotiations with India, as have many other countries, and failed to get it across the line because India is just difficult to get things across the line. Agriculture is particularly problematic for India as well because it has a domestic agriculture sector that it is keen to protect. So I think India should be on our country radar screens as well as on the radar screens of individual New Zealand corporates. But it is a tricky market to penetrate. But that said, if you just look at the numbers, it very much should be, on our list. And there's, New Zealand, if you like, has, is in a privileged position. We've got, long-standing relationships from Edmund Hillary to the soft power associated with cricket and the like. So there's many reasons that New Zealand is in a good position with India. But I think it's one of those markets that just takes sustained, ongoing investment to crack. It's not going to be a kind of explosive growth profile in the way that China was 15, 20 years back. I think it's going to be a much more gradual process. But it's if New Zealand can get it right, there's a big upside.
Well, what about our old friends in the United States? Clearly, still a hugely important global economy. One we've never cracked an FTA with either. Notwithstanding a great deal of effort. There were great hopes, of course, for the TPP, which then got literally torpedoed, and they're still not in the renamed comprehensive partnership. Nonetheless, the US economy often surprises and continues to be one of some opportunity for us, despite not having the open access that we would like. What's your expectations of how we would fare in that market going forward?
Well, I think the US is a very attractive market, and it's growing remarkably well. I mean, the Q3 GDP numbers that came out a week or so back, 4.9%. So, at or about Chinese growth rates. So, it's not going to stay there. It's going to come off a little bit. But the US continues to surprise. It's had a very, very strong recovery from the pandemic. So despite very obvious political dysfunction, the US economy keeps on keeping on. I think Mr. Biden has actually done a very strong job in terms of economic management. I don't think he gets the credit for that, but I think he and his team have done a good job. I think the outlook for the US remains positive. They've got enormous strengths around technology. AI is the most recent reminder of US technological leadership. The industrial policy initiatives they are launching around semiconductors or green, are attracting very substantial amounts of capital into the US. And so I think the US is on a roll. I think there are many intrinsics that are positive. And you look at New Zealand's export profile, exports into the US are growing reasonably strongly across a whole array of categories, from commodities through to services. So I think the US, for New Zealand, as for many others, remains a very attractive market. I think it's cementing its status as the number one economy in the world. And as an aside, going back to my observations on China earlier, I think that the prospect of China overtaking the US to become the number one economy in the world by GDP, I think we should all be pushing that date back significantly. So I think the US is on a roll, and China is beginning to run into some heavier weather. So I think the US, in a sense, is a very attractive market, obviously a market with which New Zealand has much in common in terms of values and norms and sort of cultural touch points and the like. But of course, the big risk factor around the US, and there are some economic risks to be sure, but the big risk factor is really political in nature. I think the domestic political risk profile of the US is substantial. I mean, if you look at the very untidy process around appointing a new speaker to the House, you have to think ahead to the elections in about a year's time, presidential elections in a year's time in the US, with the quite remarkable prospect of Mr. Trump getting a second term. That could do enormous damage to the US, both domestically, but also certainly to US standing in the world. But I think, just sort of drawing back from that, one observation that I would make is that although Mr. Biden and the first Trump administration are obviously very different animals in terms of professionalism and the absence of psychodrama and the like, there's also been quite significant measures of continuity between the two in terms of substantive policy. So you mentioned free trade agreements. Mr. Trump pulled out of what was then the TPP, but the current administration has no interest at all in signing FTAs with anybody. In fact, it seems quite opposed to the notion of trade reform at all. Mr. Biden is, if anything, more hawkish on China than an already hawkish Mr. Trump. Industrial policy, made in America, America first, protectionism, these are all hallmarks of Mr. Biden's administration as much as they were of Mr. Trump. So although I think a second Trump administration or a Trump lookalike second administration will be deeply damaging, I think the other thing to remember is actually in substantive policy terms, there has been significant continuity between the two. And so at least some of the differences, some of the risk factors are more kind of optical, more about the nature of US relationships with the world. There will also, I think, be quite significant measures of continuity between the two administrations. But yes, there's risk written all over the US at the moment.
Yeah. Just to remind people, start putting your questions in the box, because we will be coming to them. David, you've written that you think globalization is changing. It's not ending, but the world is not de-globalizing. So how is it changing, and what does it mean for us?
Yes, I mean, there's a kind of a common line in the commentariat that the process of globalization over the last few decades is now going into reverse. It's unwinding as kind of countries retrench and become protectionist and the like. To me, that's not evident in the data. It's certainly clear if you look at a measure like world trade to GDP, that ran up very strongly from, let's say, the early 90s to about the global financial crisis 15 years back. And since then, it's kind of, roughly speaking, moved sideways. So that's not as strong as it was prior to the global financial crisis, but neither is there really any evidence that it's unwinding. What I think is happening is that we are seeing a more regional and political version of global flows, by which I mean, rather than having far-flung supply chains with production made in, for example, low-cost East Asian markets for consumption in Europe or the US, we're seeing supply chains becoming much more localized. That's partly a response to the pandemic and concerns around supply chain resilience and not being exposed to physical disruptions like the Suez Canal being closed or a pandemic. So you want to have production and consumption a bit closer to each other, but also measures of kind of geopolitical de-risking. So Janet Yellen, US Treasury Secretary, talks about friendshoring, the notion of undertaking trade and investment with countries who are in some way friends or with whom you are aligned. Those partners are often more kind of geographically proximate within Europe, for example. So we are seeing a reconfiguration of flows. They're becoming much more localized. But we're also seeing politics play a much more significant shaping role in terms of who does trade with whom. So just a couple of observations. If you look at Chinese exports and imports, trade with the ASEANs, trade with the BRICS grouping are growing quite strongly. Trade with Japan, Korea, the US is going into reverse. Similarly, if you look at US imports, the US now imports more from Mexico than it does from China. So we are seeing, gradually, it's fair to say, but we are seeing a reorientation of those trade and investment flows around kind of geopolitical affinity and less a straight commercial calculus. So we are going to see goods and services rather continue to be traded across borders. It's very difficult to get that genie back in the bottle because global flows matter enormously for welfare. But the nature of those flows, what they look like physically, I think is shifting. And so for countries like New Zealand, small countries very reliant on global markets, that has implications in terms of where we source our goods and services from, where we attract capital from, and I think we need to be prepared to kind of reposition, our trading and investing relationships as other countries are doing as well.
Mm. And there's also the existential threat to us of the way the high-value Western markets read the climate crisis, right? You hear a lot more talk about, we should be buying food that we're growing locally. We shouldn't be traveling long distances. I recall many years ago having lunch with prominent UK commentators, and one of them said, well, Prime Minister, your country's economy is stuffed, isn't it? And I said, excuse me. And he said, look, no one's going to want to fly there, and they're not going to want to eat food that comes 12,000 miles. So that, just at the headline level, I think is an existential threat to us unless the sustainability story is pretty good. Would you agree?
I think there are real risks. I mean, that the shape of New Zealand's export profile is highly exposed to shifting preferences around the emissions intensity, or indeed changing measures around carbon pricing or regulation, because our, at least pre-pandemic, the two biggest export categories we have were international tourism and dairy, both of which, particularly long-haul tourism and dairy, have significant emissions intensity around them. So, I think there are significant exposures that New Zealand export base has. Now, consumer preferences are shifting, but not shifting overnight, and it's going to be a gradual process. And obviously, there are technical debates around how New Zealand's emissions intensity of horticultural or agriculture more broadly compares with goods produced close to consumer. So food miles can be a slightly misleading debate. But the point is, if you look at dairy, if you look at red meat, you look at tourism, all of those have significant embedded emissions. And it's not only that consumer preferences are shifting, or that carbon pricing is coming on stream, but also there are new technologies around artificial proteins, precision fermentation, and the like. So I think New Zealand needs to begin to grapple much more seriously with how we begin to meet shifting consumer preferences and the extent to which we, if you like, future-proof our export profile. So if these consumer preferences do continue to shift, or if new technologies come on stream, that we've got some new growth engines. And given New Zealand's scientific base and capabilities around the agricultural sector, we should be ahead of the curve on this stuff. I'm not convinced that we are, and I think we need to take this a lot more seriously.
In the health circles I move in, we talk a lot about the 3 C's which have impacted global health, and particularly advocating for women, children, and adolescents. So we talk about the climate crisis, which we've just touched on. We talk about COVID. The pandemic was a pretty devastating blow to the global economy, whichever way you look at it, let alone to human health. But then the 3rd C is conflict. And haven't we just seen the level of conflict explode? And the most high-profile ones in our media, obviously Ukraine, running from February last year with the Russian invasion, 24 February, as I recall, and now the war in Gaza. So these geopolitical or conflicts with geopolitical implications also, of course, have the impact of derailing economic momentum too. What comments would you like to make about this?
Well, I mean, as you say, the two kind of major conflicts, Ukraine and now Israel-Gaza, in addition to the enormous humanitarian cost, have both had significant kind of economic shocks. Ukraine, particularly around energy flows as well as food prices. Aspects of that have now unwound as there's been a degree of normalization and stabilization. But they've exerted a significant toll on economic outcomes, particularly in Europe and some emerging markets as well. At the moment, the conflict in Israel and Gaza, hasn't expanded to become a full regional conflict, and so the impact on energy prices and the global economy has been somewhat muted. But I think we need to take seriously the possibility that that conflict expands, and if that did happen, clearly that is going to have much more significant kind of economic spillovers and social spillovers as well. Most notably, I guess, through energy prices. But I think the reality is that it's not just these high-profile conflicts, be it Gaza or Ukraine. I mean, if you look at the various measures of the incidence of global conflict, that has spiked higher over the last several years. You look at the series of coups through sub-Saharan Africa on the Sahel. You look at conflicts in Nagorno-Karabakh between Azerbaijan and Armenia. All of these conflicts have kind of idiosyncratic motivations, but they also speak, I think, to a world that's much more fluid, where the big powers exert slightly less control, where there's a degree of kind of chafing against kind of existing powers, if you like. And I think the risk as we move into a more contested kind of global space, we are going to see more of these conflicts with the big powers really struggling to exert control and influence. I think both in a humanitarian and social sense as well as in an economic sense, that the risk profile around the world is significantly higher than it has been for a while, and the incidence of what I call tail risks, things that are not black swans but not fully expected. These things are increasing in intensity and frequency, and we need to get prepared for a much more turbulent world. Unfortunately, events like Israel and Gaza and Ukraine are, I think, going to become much more common.
Yes, you use that phrase, David, a more fluid global system, and some of our questions are starting to touch on that. We've seen, for example, with the summit of the BRICS in South Africa earlier this year, an expansion of the BRICS. To what extent do you think that has the potential to establish, quote, an alternative world order? And Amanda Ellis's question gets to this. I must say I've been more taken by the view that there's probably not a lot of agreement on much within the BRICS themselves, except that they don't particularly like a unipolar world led by the United States. But what significance do you attribute to the expansion of the BRICS, as it were, and where it's likely to go?
So, I mean, as with you, I think they are clearer on what they disagree with as opposed to what they agree on. They don't like a US-led world. That's absolutely true. It's true across the BRICS, but neither do they particularly want a China-led world either. So, therein you have an immediate conflict. Now, I think the expansion of the BRICS to what should be 11 countries is interesting, not so much because I think it's going to lead to a coherent kind of organizational form or a coherent kind of set of coherent block, but more because it signals a shifting in the kind of economic center of gravity. If you think about the BRICS plus Saudi, plus the UAE, plus Egypt, plus Argentina, you're getting a much broader swathe of the global south, who are significant in the commodity space, both energy, soft commodities, rare earths, critical minerals, and the like. So you're getting a group of countries that are significant in key parts of the global economy, between which you are seeing rapidly expanding trade and investment flows. So to me, the expansion of BRICS, it's more a reflection of a shifting in the global center of gravity and new patterns of trade and investment emerging that, in some sense, offset reliance on Western economies, and in many cases, that's a deliberate aim of this. These economies want to become less exposed to a Western-led system, want to become less exposed to the US dollar because they've seen what happened to the Russians after the invasion of Ukraine. But I find it difficult to see how this becomes, in any sense, a replica of a G7 or an organization that has real institutional form. And even the expansion was deeply contested. It was driven primarily by China. India was exposed to expansion because it feared the emergence of a more of a China-led organization. Other countries were deeply concerned about a dilution of their roles if you expand membership. So there's deep conflicts running through the BRICS organization. But that said, I think it is a reminder that we are seeing new centers of economic gravity emerging. I think some of the advertorials around, we're going to have a BRICS currency or this is going to displace the US dollar, I think that's pie in the sky. I don't think that's going to happen anytime soon. But there is, ongoing diversification. Countries in the global south want to have options. and the expanded BRICS grouping is one manifestation of that.
Yes, and probably more about options than about a determination to decouple. I mean, often the decoupling language seems to come from the US with its range of sanctions, for example, on the technology area from China. But you look at the group that are in the expanded BRICS, there's countries in there that have very close relationships with the US, if I could put it that way. So interesting.
I think that's right, and I think this is largely about options. Countries want to have good relationships with as many people as they can.
Yeah. Now, Peter Adams asks, David, could you comment on the significant move away from the, quote, market knows best and free trade values, which Joe Biden's de-risking and picking winners, bracket chips for one policies, represent?
So I think we are seeing a shift in the center of gravity. So Jake Sullivan, the US National Security Advisor, gave a speech back in April, I think, outlining a new US approach to essentially international economic policy. And there are a few striking things from that speech. One is these are my words, not his, but kind of the repudiation of a free trade agenda. It's not that the US was always really leading on free trade, but certainly the administration attributes many of the ills in the US, from populism to hollowing out to a widening measure of income inequality, to international trade, and particularly to the China shock. And so a sense that we're not so much interested in further opening up. We really want to focus at home, creating more jobs and the like. So you're not going to see the US move ahead with any more trade agreements. It's doing some things that it's called the Indo-Pacific Economic Framework that are very, very pale imitations of trade reform. But in general, the US is not interested in the WTO. It's not interested in trade agreements. So that's number one. There is a sense that the US could have moved too far in one direction and now it's correcting. I think that's a misinterpretation of the US experience. I think many of the US failings were domestic in nature. Social insurance, labour market policy, skills policy were all badly done. I don't think it really had very much to do with US trade policy, but that's the US interpretation. So they are becoming a lot more deliberate and hands-on. And the US administration under Mr. Biden is becoming much more deliberate about the use of aggressive industrial policy. So, using subsidies and other incentives to attract investment into the US in renewables, semiconductors, and other strategic priorities. And so there is a sense that the US has been too hands-off. Now it's moving to a much more hands-on role. The concern with many other parts of the world about that is it's got a very heavily protectionist element. So unless stuff is produced in the US, it doesn't attract subsidies. So from a European perspective, you're seeing a giant sucking sound with firms allocating capital to the US and out of Europe in order to attract the subsidies of the Inflation Reduction Act. So I think, again, that's quite a shift in the aggression, if you like, of US state-led policy, not a complete reversal, because aspects of that began under Mr. Trump, but certainly there's been a foot on the accelerator. And then I think the final thing that's happened is there's a conjoining of economics and geopolitics. And so there's a sense that you can't separate out economic policy, trade policy, innovation policy from geopolitical rivalry, particularly with China. And China is one of the few bipartisan issues in the US. They have become, under the current administration, even more hawkish than under Mr. Trump. And so this language of de-risking or decoupling, this language of friendshoring, imposing restrictions and sanctions is, that's going to become a key animating feature of US policy. And although in Mr. Sullivan's speech, he talked about what he called a small yard and a high fence, which are going to be imposing restrictions on a fairly narrowly defined set of categories that are dual use or that are in some way sensitive. I think the reality is, and we've already seen this, that yard is becoming much, much larger, and sometimes for economic reasons as much as national security reasons. And so I think, to answer your question, we are seeing quite a reorientation of the way in which the US conducts domestic economic policy, the way in which it engages in terms of trade policy, with a much more heavily state-led approach to industrial policy, and a much stronger motivation by concerns around geopolitical rivalry. and that is going to impact the way in which the US engages with its partners and allies. I'm in the Netherlands at the moment. The US leant very heavily on the Dutch government to impose export restrictions on ASML, which is one of the leading semiconductor machinery companies in the world. And so the US is not just doing things at home, it's increasingly relying or requiring its partners and friends and allies to behave in a way that's consistent with US preferences. So there are significant spillovers in terms of this new US policy approach.
And the geopolitical implication of that, of course, is that China then sees this as constraining its capacity to grow and develop and deliver higher living standards. So, and also is not so given to sort of cherry picking issues where there will be cooperation, wanting, I think, a more strategic approach to the relationship. But the world desperately needs these two great powers to be cooperating around climate, whatever we do to reform the global governance around pandemics and many other things. So, yeah, a lot of tension to play through there, I think. Carl Worker says, great session. Very interested in David's assessment of risks to the US economy from the scale of its debt and the impact of now much higher long-term interest rates outlook. As David noted, US economy has performed very strongly under both Trump and Biden, but many observers worry about the extent to which this has been driven by sustained fiscal incontinence and massive money creation, stoking a huge asset bubble with highly inequitable distribution of benefits. Are these in any way valid worries, David?
I think on the fiscal side, yes. So the US federal debt to GDP is now above 100% GDP, which is, you've got to go back to World War II before you saw government debt levels at that level. We've got federal deficits running at very high single digits, so 7, 8, 9% of GDP over this year and the next couple of years, in the context of an economy that's growing very strongly. So ordinarily when an economy is growing strongly, you'd expect to have a lower deficit. You really only expect to run deficits at that level when your economy is in a pandemic or a GFC. So I think that's that trajectory is increasingly unsustainable. We're seeing interest rates move up, partly because the Federal Reserve is tightening policy, but increasingly because we're seeing markets demand higher risk premium for holding US government debt. Now, of course, there are some political risks around ongoing dysfunction, government shutdowns, so on and so forth, which investors are requiring a risk premium be paid. But they're also kind of looking ahead the next 5, 10, 20 years and trying to figure out how the numbers actually add up. And it's very difficult with the current US political setup to see how some grand bargain of kind of fiscal consolidation happens where you put the fiscal track back on a more sustainable setting. The only thing you can really agree on is tax cuts or increased spending, and that will be even more the case if Mr. Trump or someone like Mr. Trump wins a second term. So I think it is right to be concerned about US fiscal risk. The counter to that, of course, is that the US remains the central global economy. US treasuries are the go-to asset, despite the risk attaching to that. There's no other asset class that's as large and as liquid. So the US has more freedom of maneuver, if you like, than a regular garden variety economy, which means it has a while to go before the US runs out of space. But at some point, reality will bite. So I think it is a real set of issues to be concerned about, and it's not only a set of issues to be concerned about in the context of the US. If we are moving into a world of higher interest rates, partly because of these domestic US political issues, that is going to have a significant impact on emerging markets and others, where if there is a higher cost of borrowing in US dollars, that is going to deeply constrain the growth outlook for emerging markets and beyond. So, yes, for a big sort of risk properties around the US that have big significant spillovers. That is often the case. It's a bit like the Wile E. Coyote. The US can kind of run, above the ground for some time, without necessarily sort of falling to the ground. And so I think we've got a little bit of time, but it is something to be, worried and thoughtful about.
Keith Johnson asks, how is the UK-New Zealand relationship likely to develop, if at all? I suppose the sort of annex to that question might be, does it particularly matter given what seems to be the diminished position of the UK in the world?
That was actually going to be my answer. I don't think it really is of much significance. I mean, obviously, it's not a trivial market, still in the G7, and it's it is an export market, although it's a long way away. So it's not going to be an enormous export market. It's a country with whom, in general, we are kind of aligned and see many international issues in a similar way. But the UK post Brexit is one just growing a good deal more slowly. Is diminished strategically because of its absence from the EU, and is going to be, I think, fairly significantly consumed with domestic political issues over the next decade, be it infrastructure, be it kind of Northern Ireland, be it how do you manage in a post-Brexit world. So I think we, as any small country, you want to maintain good relationships with countries like the UK, but I wouldn't see it as a strategic priority, and I don't think the UK is spending very much time thinking about us. It talks about the Indo-Pacific a bit, but its ability to really invest into the region, has been significantly diminished, and its economic outlook is, at best, I think, muted.
It's interesting also that in a much earlier point you made in this hour, you talked about important elections coming up next year, and you didn't mention the UK one, which will happen somewhere, I guess, between the spring and the late autumn. Matty Wall has a question around what he or she terms the evidently warming relationship between Russia and China. Does it signal a divide and conquer strategic approach? I suppose my annex to that might be, is it more a case of my enemy's enemy is my friend, or what do we read into the, quote, friendship without limits, which was proclaimed before the Winter Olympics in China and then not repeated?
So, I mean, I take the friendship without limits with a grain of salt. I mean, China is supremely transactional in terms, it has a very acute sense of its self-interest, and will proceed on that basis. I think at the moment there is clearly a good measure of tactical alignment. The Russian invasion of Ukraine is tying down the US and Europe in terms of diplomatic bandwidth, military supplies, financial aid, and the like, and providing a measure of kind of cover for China. So it is a bit the enemy, my enemy is my friend. There are also some similarities in kind of worldview and outlook in terms of they don't want a US-led system, but I don't think they really agree on what would come in its place. And obviously they have, they're both in varying degrees kind of autocratic at home, and so I'm sure they have much to talk about in terms of how they remain in power. But there's also a degree to which China sees itself. I mean, China has a very hierarchical view of the world. Russia is a distressed asset. There are many advantages to having a slightly weakened Russia in terms of penetrating the market. China selling a lot more into Russia than it was pre-invasion, because Western companies have been dislocated from Russia. So I think there are some tactical reasons for collaboration at the moment, but strategically, there are deep suspicions between the two. Russians are not stupid; they understand what China could do to Russia given the disparity in size and growth outlook. And so, in terms of a genuine kind of partnership where they work together hand in glove, I find that difficult to see strategically as well. So I think tactically, yes, but having a coherent China-Russia bloc that can sustain, I don't think that's likely either.
Sandy Morrison asks a question which in effect is about the risk of spillover of the conflict now in Gaza to, more broadly, the specific question, what's your view of the risk of Arab countries uniting against Western powers who are supporting Israel? I mean, the misery in Gaza has been, obviously running at very high levels since the misery inflicted on Israel with the terrorist attack which killed 1,400 people. But the threats of spillover haven't yet materialized, will they?
Possibly, yes. I mean, I think there are probably three levels of spillover, or three domains of spillover. Firstly, is kind of within the Middle East itself, where things have been for a moment contained. The US obviously got 2 aircraft carriers stationed off the Israeli coast, actively messaging Iran not to try it on. But it's a situation in which mistake or miscalibration can easily lead to more significant sort of conflict. So I think that's possible, and we're also seeing destabilizing effects on domestic political systems. I mean, Egypt is just one example where it's not out of a realm of possibility you could see real political instability in Egypt. So I think there are very smart people who are now suggesting that the potential for this to become a regional conflict are quite high. I'm not quite there yet, but I think it is a real risk, if not military conflict, then political instability across the region. But I would say that if you look at some of the big Gulf players like Saudi, like the UAE, who are desperately keen for this not to escalate into a regional conflict, also would like to, if you like, return to a status quo ante, of normalizing relationships with Israel, have no love at all for Hamas. I think, if you like, that also provides a degree of stabilization. So I don't think we should take this at all lightly. There is risk for this to spiral out of control, all too easily. But there are some factors that provide a degree of ballast. I think that the other two spillovers that I'd point to is one on Ukraine. The stance and the perceived stance of the West in terms of votes at the UN and the like is seen as kind of hypocritical by many in the region and in the global South more broadly. You're very much on the side of Ukraine, but you're not in providing the same measure of support to the Palestinians in Gaza. That's hypocritical. And so I think the leeching of support for Ukraine is something that I think is already underway. It was never that strong to start with, but I think that's going to constrain the ability to sustain support for Ukraine, at least in the UN and more broadly over time, which I think is going to be problematic. And the final degree of spillover is in Asia. China is looking at this, and there are. I spent some time in Singapore a couple of weeks back. There is concern about the extent to which the US is going to be overly distracted, the extent to which the US is going to struggle to really commit to security provision in Asia, and the extent to which opportunistic behavior by China might be encouraged. So although that might be a bit of a stretch, I think there are these events that happen in the Middle East, as we've seen so many times before, do have a tendency to have kind of global reach. And in this case, I think we should be looking both to what happens in and around Ukraine, but I think also looking at developments in East Asia as well.
Just the last one, David, and bringing it right back home. Karen Andresen asks, with the EU inflation rate dropping to around 2.4% and Belgium at 0, what impact do you see for New Zealand? Any at all? Is there hope on the horizon for us of getting back to low inflation?
Short answer is yes. I mean, the slightly frustrating aspect of watching the New Zealand debate from a distance and a lot of Reserve Bank bashing is that the New Zealand experience was very, very, very similar to the international experience, post-pandemic for very similar reasons. Most countries saw a spike in inflation, very aggressive, sort of fiscal and monetary responses to get us through a pandemic in New Zealand as elsewhere. Supply side constraints, and so inflation went up, compounded by higher energy and food prices as well. So although there are idiosyncratic factors in New Zealand as in other countries, in general, the broad contours of our inflation experience were globally determined. And what was true on the way up is going to be true on the way down as well. So although there are some issues that are New Zealand specific, in general, inflation is going to moderate, both for external reasons, but also because the effective tight monetary policy by the Reserve Bank is going to bite. So it's going to take a while. Getting down to 2% or 3% in a New Zealand case is not going to happen immediately. And I think there do need to be conversations about what the appropriate inflation target is. But I think in general, yes, inflation pressures are going to moderate in New Zealand for similar reasons as we're seeing in Europe and elsewhere.
So hope on the horizon for the Kiwi mortgage rate, we hope. Thank you so much, Dave. It's been a terrific pleasure talking to you. I'm going to ask Murray to bring our session to a conclusion with thanks. Murray.
Thank you, Helen. That's the conclusion of this evening's webinar. Thank you very much, David, for your insights. Thank you, Helen. And thank you all for joining tonight's discussion. We look forward to seeing you at our next webinar. That's with Malcolm Turnbull, midday on 11 December, and we'll have registrations open for that next week. No hōora mai, mate wā, and thank you very much.